Welcome to the only video you will need on the EV darling of the month, the Workhorse Group, or more officially, the Workhorse Company Incorporated. Had you owned $1,000 of Workhorse stock on June 5th of this year, it would now be worth $4,700 less than 2 months later. So now the big question becomes, what's next? If you're new, prepare to get hit with the big facts only. Workhorse Company has more delivery EVs on the road than any other company. Unfortunately, that's not saying much as they only plan to deliver 300 to 400 vehicles in 2020. They're now hyper-focused on electrifying last-mile delivery. They're pursuing this with delivery vans, delivery drones, and telematics software. We'll cover all of these shortly.
So what's all the hype about for a company with Q1 2020 sales of $84,000?
To finish that thought, their sales were $364,000 in Q1 2019. Their SG&A expenses increased year over year from $2.1 million to $2.6 million, and their cost of goods sold went from $1.4 to $1.7 million. They did report a net income of $4.8 million in Q1 this year, but it was largely due to interest income of $13 million due to warrant adjustments. At the end of Q1, Workhorse had cash and equivalents of $16.8 million, down from $23.9 million at the end of Q4 2020. As you can see, all of these metrics seem to be trending in the wrong direction.
Before getting deeper in valuations, we need to break down the business model.
Workhorse Group is an American company headquartered in Loveland, Ohio, with another factory in Union City, Indiana. At their HQ, they design and produce EV powertrains at the 50,000 square foot facility for their chassis. At the bigger 200,000 square foot facility, they build and assemble their W62 and W88 chassis. AMP Electric Vehicles went public in 2010, and they later pivoted from passenger vehicles to commercial. They partnered with Navistar, a major US trucking OEM, and they were tasked to power a 1,000 cubic foot delivery van. They delivered their first vehicle in 2012. In March 2015, AMP formally changed their name to the Workhorse Group Incorporated, and they now trade under the ticker WKHS on the NASDAQ. You're most likely familiar with some of their customers like UPS, FedEx, and DHL, and also some of their partners like Panasonic for batteries, Ryder for maintenance, Dana for components, and Duke Energy for charging infrastructure. Here's what you need to know about their delivery trucks. They're called the C650 and C1000 with the numbers representing cubic feet of storage. These step vans are lightweight, saving 4,000 pounds when fully loaded compared to internal combustion engine competitors. They use a modular battery pack system coming in two configurations, a 35 kilowatt hour 2-module pack or a 70 kilowatt hour 4-module pack. Their delivery vans can travel 100 miles per charge and have a top speed of 75 miles per hour.
What's really cool is the drones take off from on top of the truck and they maintain line of sight.
Their horsefly drones, they're called, have 4 rotors that can fly fully autonomously up to 45 miles per hour, and they weigh 23 pounds without the battery. These drones have energy costs of 3 cents per mile and have a battery pack capacity of 40,000 milliamp hours.
And yes, they developed an app for customers to use.
This Aries delivery app, it's called, allows customers the ability to monitor location of packages, trucks, flight times, and to see onboard video. The customer can decide where the packages will be delivered on their property with location updates and real-time flight videos.
They also developed an app named Metron that helps the big corporations track their fleet.
This app will be a big value add for any business considering a Workhorse product, as it'll give them the ability to track their trucks in real time, which will in turn help them with optimizing their route deliveries and overall efficiency of their fleet. Now, before we get into the valuation of Workhorse, I think it's important we cover a quick timeline of what they've been doing the last few years. After their first horsefly drone delivery in 2017, they started development of 1,000 C-Series trucks, working with UPS in February 2018. 1 year later, they completed field testing for UPS, and then 1 month later, in April 2019, they began their partnership with Duke Energy for charging infrastructure and their battery management solutions. Late last year in 2019, they established the Lordstown Motors licensing agreement, which we'll cover shortly. To date, UPS has placed 6 orders totaling 1,345 vehicles that have driven over 5 million miles.
Now, what you've all been waiting for, the investment analysis of Workhorse.
First, let's look at the addressable market for last mile delivery. Workhorse is the first mover and the only pure play US company in the last mile delivery space, which is an $18 billion market annually. These last mile delivery vehicles cost about $50,000 per truck, and around 350,000 of them are purchased annually. Workhorse offers a positive ROI after about 3 years. Workhorse also has proprietary information in batteries, drivetrains, chassis, software, and telematics, with 7 granted and 4 pending patents.
Workhorse has the capacity to make 60,000 vehicles per year at their Union City plant. This number will matter in a second.
But before getting into that, I want to quickly explain the Lordstown Motor partnership and what this means. The former Workhorse CEO and founder Steve Burns started a new company called Lordstown Motors. This company will build electric pickup trucks at the former GM factory in Lordstown. This was a project that was set to take place under the Workhorse Group company, but that project had stalled out, and it was rumored that Workhorse had run out of money to pursue this project. Burns ended up paying Workhorse $15.8 million to license the IP, and his former company will also earn 1% of each truck sold by Lordstown, as well as 1% of any equity raise. Workhorse will retain a 2-year, 10% equity stake in Lordstown Motors in exchange for the license of the technology.
And this is the Lordstown Motors endurance truck.
Another major piece of the puzzle for Workhorse Group is the potential contract with the United States Postal Service. You've probably heard a lot about it, but quickly, this is a $6.3 billion, 165,000 vehicle opportunity. In 2016, Workhorse won a prototype contract for 6 units, which they delivered in 2017. However, this program has been delayed due to the coronavirus. 3 other companies remain in the mix to win this contract to build USPS a new delivery fleet. USPS gets around 5 miles per gallon with their current vehicles, while Workhorse vehicles could get a 40 mile per gallon equivalent as a fully electric option. It would thus be able to handle the constant starting and stopping of typical USPS routes much better than competitors.
Now for the numbers and how we can think of valuing Workhorse.
Workhorse has a current market cap of $1.38 billion at a $15 share price. Workhorse is not currently profitable, and it may be a few years for them to reach this milestone. Given that Workhorse is still in its infancy, it's better to value their business model using a price-to-sales ratio. Looking at this chart, you see price-to-sales ratios for competitors in the space as of July 6th. Thus, to be conservative, we will use a price-to-sales ratio of 2 to value Workhorse, as that would be the lowest valuation of the bunch.
And just like Tesla, there's a lot of people that are betting against the company, so there is a short interest of 20%.
With a 60,000 vehicle production capacity and a 50,000 average sale price, that would generate $3 billion in projected revenue annually. Of course, for Workhorse to scale to delivering 60,000 units a year from 300 to 400 this year, we know that's a massive task and will take years. However, if they can eventually hit that capacity, and we leave out any revenue from Lordstown Motors and the drone business, a price-to-sales ratio of 2 would give them a valuation of $6 billion. With 91 million shares outstanding, that would result in a share price of around $65. Now, taking a more conservative approach, if they can sell 20,000 vehicles a year, 1/3 of their capacity, that would be roughly $1 billion in annual sales. With the price-to-sales ratio of 2, that would be a $2 billion market cap, once again without anything from Lordstown or the drones. This would result in a share price of around $21.
So there is plenty of room for growth for this company, but it's really going to lie in the hands of the USPS contract.
If Workhorse can win the USPS contract, that would of course be massive, but they will still need to prove they can actually fulfill that order. If they don't win that contract, there will be massive question marks as to where their demand will come from, as that failure would mean another company is doing something superior than what Workhorse can offer. But of course, if you want to take a bullish stance and bet that they win that contract, drone deliveries become more relevant, and their royalties from Lordstown develop into $1 billion or more annual windfall, you can easily make a case that there is plenty of upside over the next 5 years. Now guys, all of this to say, Workhorse does have a serious competitive advantage in the potential of winning this contract. As mentioned, taking the miles per gallon from 5 to 40 for USPS is obviously a huge deal, but when you go fully EV, we know that the maintenance costs are also reduced pretty drastically. It was reported that they can reduce operating costs for the Postal Service from $1 per mile down to 36 cents per mile. And of course, the stop and starting of the routes will be better served by a fully electric option.
So this USPS contract is an all or nothing. Workhorse or another company could win part of the $6 billion deal.
And guys, of course, as we all know, with the coronavirus, the demand for touchless delivery has gone way up, which of course will in turn benefit Workhorse. So as you guys can probably see, this is a very speculative investment, as most are with companies in their infancy. However, if things break right, there is plenty of room to run for the stock price over the next 3 to 5 years. However, it could just as easily run down to zero and Workhorse could be out of business in the next 2 years if things don't break right.
So we hope you learned something new today. I've actually been working on something pretty exciting and you guys will see it next video.
So if you guys did learn something new, please like the video and feel free to consider subscribing if you want to learn more about Tesla and the EV space. With that said, I look forward to seeing you guys in the next one.